So first thing I want to start with is I guess like the current news. So maybe we could just briefly touch on the current news and what impact that might have on just like crypto taxes going forward. I haven't had a chance to really look into Biden's new tax laws, but I'm not sure if you have.
Yeah, so I mean, I guess in a nutshell, there's nothing groundbreaking or anything that's going to be immediate kind of impacts for people this year filing taxes, but there's a couple of interesting things to kind of note. And I think first let's talk a little bit about wash sales because at the moment, particularly in the US, a lot of people are using wash sales to their advantage in the crypto space. What it is basically when you have a loss, an asset that's kind of in the red, or um, you've actually suffered a bit of a downturn in that asset. The wash sale rule basically prevents you from claiming a capital loss when you sell and repurchase that asset very quickly. Now, in the UK, in the US, that's a 30-day period. So if you say make a make a purchase of Bitcoin and that Bitcoin value has gone down, you can claim or crystallize that loss by just selling that Bitcoin. Now, there's a rule called the wash sale rule, which when you reacquire that Bitcoin within 30 days, then the IRS will actually deny you using that capital loss. And they basically say that, well, the purpose of making that loss is
Right.
really just to claim that tax benefit. That rule doesn't apply to crypto in the US. So, obviously it's very timely. A lot of people are actually using that to get some tax benefit out of their,
Yeah.
portfolio at the moment.
And
The
I feel like the
Biden,
US doesn't even block that in the TradFi market either. Like people do that
yeah, I mean,
all the time in TradFi.
it does apply to equities, and shares. So, that rule is actually quite prescriptive, 30 days
Okay.
before or after the sale. Um, that applies generally to securities. So, because crypto has not yet been fully classified, the general stance is that the wash sale rule doesn't apply to crypto. And, people can really take advantage of that because the tax system in the US works on a kind of realization basis. So you basically have to actually dispose of your asset to claim a loss, or when you actually pay, say, capital gains tax, you actually have to sell that asset and realize the disposition. So you can, in the US at the moment, sell crypto at a loss, reacquire it in a very quick space of time, and that wash sale rule doesn't apply for crypto. So what Biden's proposing in the budget is to actually include crypto within this category.
Okay, so would that mean, I guess, like that would also kind of more align crypto with the classification as a security also?
Yeah, I mean, it's interesting because actually what the proposal does is it considers other asset types as well. So it doesn't actually specifically
Okay.
target crypto. So there's a number going around the press, I think it's 24 billion in revenue that this will actually generate. Yeah,
Hmm.
the way I understand it is that 24 billion in revenue won't be attributed to digital assets because there are other kind of inclusions of when the wash sale rule might apply. I think,
Okay.
one of them will be related parties and so on. So, it actually remains to be seen. And it's also, obviously not a given that this will happen, but a lot of people talking about it because, we're in a point in time in the industry, in the market cycle where a lot of people are in losses, and a lot of people are trying to understand what's the tax benefits to that?
Yeah, exactly. So wow, that'll be definitely a major change.